So when financing a rental property, you've historically had a tough choice to make between getting the very best loan terms or the very best liability protection. And in this video, I'm going to crack the code and show you how you can have the best of both worlds. The most favorable loan options, those would be the ones we typically get through Fannie Mae and Freddie Mac, but also the protections offered by holding title in an LLC. And I'm drawing on a lot of personal and professional experience. I've been a real estate investor for about 26 years and a lender for coming up on 30. I hope you find what I share here helpful, and if you do, please like and subscribe. And if you're in the market for a lender, I would love to connect. My contact information is in the caption, and I would really love to talk. Now, there are, of course, tremendous benefits to real estate as an investment, but unlike a lot of other investments, purely financial investments like stocks and bonds and cryptocurrency, mutual funds, etc., real estate comes with this inherent risk. If an accident happens at your rental property, you could be sued, and even if you have really great insurance, a big enough disaster could put you at risk of losing not only the property, but also other assets, and maybe even your home. But if you put your property in an LLC and you maintain the LLC correctly, it can become this firewall. And if something terrible happens, you might lose the rental, but you shouldn't lose your other savings or your home, which makes it really easy to see why you might want an LLC. And my partner and I have each one of our own rentals, each one, every single one in its own LLC. So they're all insulated from each other as well. Now, on the lending side of things, it is possible to finance a property owned by an LLC, but there's a catch. There are only a limited number of portfolio programs that allow title to be vested in the name of an LLC at the time of closing. And if you compare them to these mainstream loans, the ones available from Fannie Mae and Freddie Mac, the terms are almost always less favorable. You might have to put more money down, pay higher closing costs, wind up with higher interest rate. A lot of them are only available as adjustable rates. It's probably going to be a combination of these less appealing features. And really the heart of this dilemma, the reason that investors kind of have to face this decision is that there are two parts of Fannie Mae guidelines that come into play. And the first is what lenders call vesting. Vesting is who owns title to a property and how they own it. And Fannie Mae rules, if you look at their guidelines, say that only living, breathing human beings, what they call in the guidelines a natural person or a revocable estate planning trust, sometimes called an inter vivo trust, is allowed to take title at the time of closing on a loan. Now, after closing, it's really easy to change vesting. You sign a deed, you record it with the county, and poof, you're done. You've changed vesting. So you could change vesting to a LLC anytime you want, but then you run into this second troublesome part of the Fannie Mae rules, which is that buried in all that fine print that you sign when you take out a loan is something called a due on sale clause. Sometimes you'll hear it called due on transfer or an acceleration clause. And this clause says, if all or part of the property or an interest in the property is sold or transferred without the lender's prior written consent, lender may require immediate payment in full of all sums secured by this security instrument. And then Fannie Mae goes on to give their servicers, and servicers are the people who are collecting payments and enforcing all these rules. That's the name you see on your mortgage statement. And they give their servicers some really blunt instructions. They say, when the servicer learns that a transfer of ownership has occurred, it should notify the property purchaser and the mortgage loan is due and payable. The servicer should provide 30 days notice to the purchaser to pay the mortgage loan balance in full or apply and qualify for a new mortgage loan. If neither is received within 30 days, the servicer should institute foreclosure proceedings. Yeah, foreclosure proceedings. So in a nutshell, you transfer the title and your loan comes due in full. And if you get caught transferring the title, you're going to have 30 days to get a new loan or pay your loan off, or you're going to go into foreclosure. Now, in spite of this, many real estate investors have chosen historically to just try and have it both ways, finance with a Fannie Mae loan, and then do that easy thing that you can, transfer the title into an LLC after closing, and then cross their fingers and hope they don't get caught. And this is actually exactly what my partner and I did. After purchasing each one of our rentals, we would switch the title into an LLC and just hope for the best. So when forced to choose between the really real feeling day-to-day risks connected to whatever a renter's drunk house guest might do this weekend versus this vaguer feeling risk that our servicer might notice a title transfer on a loan that we're reliably making payments on, or deal with these yucky loan terms we'd otherwise get stuck with. We just chose to transfer the title to an LLC and roll the dice. Now, as a lender, I've been around thousands and thousands of transactions, and I would say that many and maybe even most of my investor clients, any serious investor clients, have pretty much just made the same call. And most of the time we get away with it. The title transfer to an LLC flies under the radar. You're paying your payment on time. There's no reason for your loan servicer to look at your title history and see if it's changed, but this isn't always the case. And if you get a nasty gram from your lender threatening to begin foreclosure proceedings, it is not fun. And I've gotten a few really stressed out phone calls from people who are in exactly this situation. And this is why I'm really happy to say, and the reason I'm recording this video is to hopefully let you know that the dilemma that people have historically faced in the past is really a thing of the past. Both Fannie Mae and Freddie Mac now offer a path to a post-closing transfer of title to an LLC that isn't going to trigger that due on sale clause. Now, there are some restrictions and there's some rules and there's a process. So let's break down these details. And I'm going to start with Fannie Mae first, and then I'll kind of point out some of the key details that are different with Freddie Mac. One important thing to know is that with Fannie Mae, they didn't grandfather older loans. So if your loan was purchased or securitized by Fannie Mae before June 1st of 2016, the old rules still apply, and you won't be able to transfer your title to an LLC without violating the terms of your loan and risking acceleration. And Fannie Mae has another stipulation to be aware of, and that's that the original borrowers on the loan have to be the majority owners or members or partners in the LLC. And this is sort of predictable, but they also say, and this is kind of obvious, that when you transfer title to the LLC, that can't coincide with violating any other term of your loan. So for example, you finance your property as an owner-occupied property, you're still going to be bound by the original requirement, the agreement that you made when you signed the closing documents to live there for at least a year. And you do have to ask for and receive permission from your loan servicer before switching title. So don't go cowboy and make the change and just record title. If you do that without getting that okay, you're still going to be at risk of having your loan called. But the process is actually incredibly simple. All you have to do is contact your loan servicer, let them know you want to transfer title to your LLC. They're going to send you a letter, and this is kind of a strange prescribed thing that Fannie Mae requires. They send a letter telling you that you'll be required to transfer the title back into your own name if you want to refinance the property, and then they might charge you a small fee. One of my clients had to pay like $100, so it's not anything crazy. After that, you'll get a letter clearing you to make the change. You can draft your deed, trot down to the county, record it, and you've got, worry-free LLC vesting. You can sleep soundly at night. Now, Freddie Mac's process is exactly the same, and they've got the same stipulation. They're going to send you that letter notifying you that title has to go back into your name before you're able to apply for a new loan. But their rules are different in a couple of really important ways. On the one hand, they're more generous. They have extended the option to swap the vesting to an LLC to any loan they own. There isn't a date requirement like Fannie Mae has. Regardless of the date they purchased it, you can get permission to transfer title to an LLC. But where Fannie Mae just requires that the original borrowers on the loan be majority owners of the LLC, Freddie Mac actually requires that all borrowers on the loan are members of the LLC or partners or owners of the LLC, and one of the original borrowers on the loan has to be a managing member or partner. So let's say your mom and dad co-signed on a mortgage when you purchased the property and they're not a member of the LLC. In that case, you would be out of luck. They wouldn't approve an LLC title transfer. So there's one thing, however, I really don't like about Freddie Mac's rules, and that's that they won't approve a title transfer to an LLC until your loan is at least a year old. Now, if you're managing your liability with your rental seriously enough to go to the trouble to form an LLC and you want to transfer title, waiting a whole year to get the protection from that LLC feels kind of squicky, almost like you're tempting fate. It's like Murphy's Law that something was going to go wrong during that year, right? So when I help a client with a new loan, I have the ability to direct whether it's going to be sold to Fannie Mae or Freddie Mac. And if I know a client wants to make a title transfer out to an LLC after closing, even if they might, I always direct the loan to Fannie Mae. And that way the title transfer approval process can get rolling as soon as the dust settles on closing and the loan servicing is set up. That takes, sometimes 30 or 45 days after the closing date. So you really can get it rolling pretty darn quickly. Now, if you've already got a loan, and odds are high that's the case if you're watching this video and you're wondering, gosh, is it owned by Fannie Mae or Freddie Mac? And in the case of Fannie Mae, was it before June 1st of 2016 or after? Scroll down to the caption and you'll find links there to a couple of lookup tools that you can use to answer these questions. You can look up whether your loan is owned by Fannie or Freddie, what the purchase date was, and once you know that, you can reach out to your loan servicer and you'll know what to expect and which version of the approval process you're going to be going through. Now, after you've got the title switched over to your LLC, you can enjoy the best of both worlds. You've got the best possible loan terms, and you can sleep soundly knowing that you also have that added liability protection from your LLC. And you have to remember that all of these rules that I've talked about only apply to loans that are owned by Fannie Mae or Freddie Mac. If you finance your property using another type of loan, FHA, you're a veteran and you used a VA loan or a USDA loan, transferring the title to an LLC is a big no-no. You can't do it, and it would trigger a due on sale clause. And I should add that there are a few times when you're going to want to put the title back into your own name. One of those is exactly what your servicer will tell you as a part of the approval process in this letter that they're required to send out to you. You need to put the title back in your name before you secure a new loan. And under current lending rules, it's really best to make that change before you apply for your new mortgage. If title is in the name of an LLC at the time that you make application for a mortgage, there's a chance that your loan might be denied. So you want to make that title transfer ahead of time. The other time it could be important to put your title back into an LLC is if you want to sell it and you plan on doing a 1031 exchange. Now, 1031 exchange is a tool that lets real estate investors sell one property and buy another property and defer paying capital gains tax. In essence, roll all the profit from one property to another without having to pay capital gains tax on it. It's an amazing program, incredible tax management tool for real estate investors, but you have to follow a bunch of rules to use it. And one of them is that the title for both properties, the one you sell and the one you're buying, have to match. If you close on the sale in the name of your LLC, then you're probably going to have to buy in the name of your LLC. And that would rule out Fannie Mae and Freddie Mac as a funding source. I've helped a few people who are kind of stuck in this situation get financing using those portfolio loan options that I mentioned before, the ones that are LLC friendly, but it is really a bummer to wind up in this situation by accident after you've already closed on a sale in the name of your LLC. You can't unring the bell and now you're stuck, and it's just because you didn't know about this issue and you didn't plan ahead. So if you're thinking about a 1031 exchange, for lots and lots of reasons, you want to make sure you have the guidance from a qualified expert. And while we're talking about qualified experts, I guess make sure you also talk to a CPA as you form your LLC. An LLC that's owned by just one person is considered a disregarded entity when it comes time to file your income tax return. So nothing really changes. You file your tax returns just like normal. But if more than one person owns your LLC, the LLC will probably need to file its own income tax return. This is usually done as a partnership, and that adds complexity and some expense and just an extra tax return to file come tax time. So I think it's worth doing it. My partner and I have made the decision that that hassle and expense is worth it, but you may decide that just having really good insurance is a more cost-effective way to protect yourself and your family from risk. Now, as a fellow real estate investor, I would love to chat, and I would connect you with any of the experts, people I use and have trusted myself if you have questions about any of these resources. And of course, as a lender, I love working with like-minded clients. So if you're thinking about buying or refinancing a property, please call. My contact information is in the caption below. I would love to talk, and thanks so much for watching.